welcome to today's report, the 18th of June 2025. So what's in store for us today? Interesting. Okay, so today's fundamental sharing is about Bank of Japan slowing its tapering to avoid hurting economy and markets. Now, the Bank of Japan has decided to keep interest rates steady at 0.5% yesterday, while announcing that it will reduce its bond tapering pace more slowly starting next year. Now, this means the central bank will still cut back on buying government bonds, but not as quickly as previously planned. It aims to avoid shaking the markets while supporting Japan's modest economic recovery. Now, beginning in April 2026, the Bank of Japan will cut its bond purchase by 200 billion yen per quarter instead of 400 billion. An interim review of this new plan will take place in June 2026 to check if things are on track. Okay. So Japan's economy is recovering, but not strongly. The Bank of Japan said growth may slow because of weaker global demands and trade problems, especially due to high tariffs from the United States. Now, inflation in Japan remains above the central bank's 2% target for now, but it's expected to ease slightly as growth slows and import costs stabilize. Now, over the past year, the Bank of Japan has raised interest rates 3 times, moving out of negative territory for the first time in years, right? But it's now being cautious. Governor Kazuo Ueda has said that if inflation stays high, they are ready to raise rates again, but only when necessary. So what's the implication for the Japanese yen? Now, the Bank of Japan's cautious approach is likely to keep the yen weak. Japan's interest rate is still much lower than rates in countries like the United States. Now, because of this, many investors borrow yen cheaply and invest the money in higher yielding currencies. This puts downward pressure on the yen. However, the yen is also considered a safe currency in times of global uncertainty. Okay, so if that's a major crisis or rising tension in global markets, investors may quickly move their money into yen, causing it to strengthen, a situation which we are seeing right now. Okay, but because of this uncertainty, we are also seeing yen moving in what they call in a sideways motion. But nevertheless, that it's a confirm, that it's a highest probability of more geopolitical tensions. Of course, you will see the yen rising in value due to its safe haven status. So while the yen may stay weak for now, it could strengthen suddenly if global risk increases or if the Bank of Japan changes its tone on the interest rates. Okay. So as for the effects on US stock market and global investors, the Bank of Japan's decision has mixed effects on the US stock market. A weaker yen makes Japanese goods cheaper, which can hurt Japanese American companies that compete with Japanese exports. It also strengthens the US dollar, which can reduce profits for US companies that earn money overseas. Okay. But on the other hand, low interest rates in Japan often leads Japanese investors to put more money into US assets like stocks and bonds. That flow of capital helps support the US market. So if the Bank of Japan had moved too fast in raising rates or cutting bond buying, Japanese investors might pull out some of their money back home. Okay. So by moving carefully, the Bank of Japan is helping to keep international investments stable. Okay, so this stability is still expected to continue for now. So for the conclusion, in short, the Bank of Japan is staying cautious to avoid shocking markets while slowly stepping away from years of ultra loose policy. Now, this strategy keeps the yen weak and continues to support global markets, especially the US, but also leaves room for quick changes if risks increase or inflation remains high. Nevertheless, I think the one of a clue to see going forward is the conclusion of the tariff discussions between the US and Japan. I think from there we would have a better idea, what's next. Okay. So with that, that's the report for today.